Good morning, and welcome to episode 237 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, August 13th, 2025. Russia continues its aggression into eastern Ukraine as Putin prepares for ceasefire talks with President Trump. Putin has been on record saying he would consider a ceasefire and ending the conflict if he was given his gains in eastern Ukraine. President Trump extended a truce on the trade war with China for yet another 90 days. The Consumer Price Index, or CPI, came out on Tuesday, better than expected. It was at 2.7% when they were expecting a consensus of 2.8%. However, the core inflation, when you strip out energy and food, has ticked up to 3.1% on an annualized basis. The Producer Price Index, the PPI, is due out this Thursday. The White House has clarified amid confusion over tariffs coming out of gold out of Switzerland. The rumor was that there would be tariffs imposed on kilo and 100-ounce gold bars coming out of Switzerland. The White House has clarified that there will be no tariffs on gold coming out of Switzerland. That has roiled the markets a little bit over the past week. Hopefully things will settle down now. Let's take a look at the numbers for precious metals. Gold is up 0.1% on the week, trading at $3,366.60 an ounce. It was $3,362.80 last week. Silver is up 2.1% to $38.62. It was $37.84 last week. Platinum is up 2% to $1,360 an ounce. It was $1,333 an ounce last week. And palladium, the lone loser this week, down 2.7% to $1,154 an ounce. It was $1,186 last week. With silver outperforming gold by about 2%, the gold-silver ratio, or the number of ounces of silver it takes to buy an ounce of gold, has come down to 87.17. It was 88.87 last week. And your dollar in this weakening trend has weakened after a little bit of flexing its muscles for a couple weeks. The U.S. dollar index is down to 97.71. It was 98.38 last week. So with CPI coming in at expectations or a hair better than expectations, disregarding the core, everybody's now talking that at the FOMC meeting, Federal Open Market Committee meeting on September 16th and 17th, we're going to get a rate announcement where we start seeing interest rate cuts. I don't know that that's the case. I think the jury is still out. We're seeing a little bit of weakness show up in the labor market, and inflation was ticking up, and now it's just holding steady. I don't know that that's enough to start cutting rates, although we may see Chairman Powell succumb to the pressures he's been facing for not cutting rates sooner thus far. So the bottom line is, none of that matters. It's all just background noise. The important thing is we continue to spend more than we take in. We will expand the money supply or inflate the currency in order to cover the over expenditures, and that will lead to consumer price inflation. Your gold is going higher. Your silver is going higher. The premiums are still low. Now is the time to take advantage of this low price, yes, even at all-time highs, this low price in gold. Buy now, buy well. You will be happy later. As always, we like you to go ahead and subscribe to our YouTube channel. Send us your comments and questions so we can answer them on the air. Subscribe to our twice weekly, always something interesting alerts. Follow us on social media. Take our once monthly information line newsletter. But in the end, don't ever forget that getting rich starts with keeping what's yours.